before tax from a loss of US 57 mil in the first quarter to a gain of 4 million US in the second quarter. This is mainly due to the less excessive soybean supply with tighter bank credit and slightly improved demand, which in the last quarter the demand was actually affected by the bird flu. However, right now, Wilmar still the crushing margins for the oilseeds still remains low and challenging. For the profit before tax for consumer products and the plantation actually improved. For consumer products, it improved 25% year-on-year with higher sales volume and lower feedstock costs. While for plantation, it was up more than 100% with better FFB output. The management, on the whole, the management message to us on last Friday was they anticipate the second half of the year, the earnings to be better with recovering crushing margin, higher CPO production, and positive earnings from the sugar business. Because usually for the sugar business, it's the profit actually coming in the second half since the commencement of the crushing season starts in June. Moving on, we'll go on to StarHub, which my colleague Colin will give an update.
All right, morning everyone. Just to give an update on StarHub, which has recently released its second quarter earnings. Right, service revenue was down 1.8% year-on-year at 552 million, and for the quarter, on a quarter-to-quarter basis, it was up 1.5%. But that's mainly due to seasonal trends, as usually for the second and the fourth quarter. The revenue tends to be up due to higher roaming revenue, right? The decline in service revenue was mainly due to lower prepaid mobile and the broadband revenue, and that those were mainly impacted due to the change in the prepaid SIM card quota, we saw a reduction from 10 to 3 prepaid card per customer allowable, as well as ongoing broadband price competition, which is depressing the broadband average revenue per user, and hence impacted on StarHub's broadband revenue. So those declines offset the gains from its postpaid mobile, pay TV, and its fixed network services. Right. So on the bottom line, the net profits was down 6.3% year-on-year, and however, EBITDA margin on service revenue remains relatively stable at roughly 32.5%. Right. Management has also updated their guidance for service revenue to be flat for the current fiscal year. Right. Previously, they guided for a low single digit. So hence, due to the lackluster results for the first half of FY14, they have lowered the guidance and guided for a flat service revenue. EBITDA margin and capex are guided roughly maintained at the same level. And for annual dividends, no surprises, as management has guided for 20 cents per share for the current fiscal year. So we do see there's a lack of foreseeable earnings growth for the current fiscal year. Upside for the 4G price hike of $2.14 per month. We do expect the upside from that area to be much more visible in the next fiscal year, as the 4G price hike is mainly applicable for new and recontracting customers. So key upsides for StarHub will still mainly be coming from higher revenue from excess data charges and fixed network services, as well as potentially lower handset subsidies, as the Android handset tends to have a lower subsidies, and the sales of it is in fact growing strongly. However, reasons for concern of buying the StarHub will be due to further decline in broadband revenue, as well as a potential new entry to the mobile competition. So due to the lack of foreseeable earnings growth for the current fiscal year, we have downgraded our rating to neutral for StarHub, and we will revise target price of $4.30 per share, which mainly implies of for a P of about 20 times. Dividend yield still roughly remains attractive about 4.8%. So due to the attractive yield, we do not really see the price of StarHub car coming down much, right? So as it will help to support the share price, right? So next, I'll hand over to my colleague Lucas to give a view of Cinemas Land, which initiated coverage.
Thanks, Colin. This is Lucas here. Yep, covering property mainly. So, well, I've initiated on Cinemas Land Limited today. So I shall share with you some of my insights on the company. I'll bring you guys through what's the company doing, what the assets it's holding on, what are land banks that they are having, and yep, identify where is the value for this, because yeah, we're actually having a very bullish outlook on this. We're actually having a very strong buy call on Cinemas Land. Alright. Alright, this is really the share price chart over the past 3 to 4 years, ever since 2010. The reason why I bring the chart back all the way to 2010 is actually to identify the fact that, well, they have been going through restructuring ever since then, and they concluded their restructuring exercise in 2011, and that was also when they actually renamed themselves to Cinemas Land from Asia Food and Properties previously. So in the restructuring, okay, they actually spin all their food business and also all the non-core property assets. So what they are left with is really what they are good at, which is actually property development in Indonesia itself. Today's share price, as of Friday's close, the share price is 61.5 cents. I think by now the share price should have rose to about 63.5, 64. Yep. So the 52-week range is between 45 cents and 71.5. Market cap at $1.87 billion, and the price to book is 1.17. However, I would advise you guys not to focus on the price to book value here, because Cinemas holds all its investment holding in the land bank all at historic cost, and therefore this the book value is artificially very low based on current market valuation. Their price to book ratio would be largely in line, maybe at 0.5, 0.6 of their book value. So that is just an estimate. So really, do not focus on the price to book here. I'm putting it out because I think this is a typical way in which investors look at property counters. So just to let you guys know, it's at 1.17, but it's really on historic book value and current day prices. It's not supposed to be. All right, going to the company proper. It's a diversified property developer. This is their taking about maybe 90% of their business operations and activities. So they develop townships, residential, commercial, retail, industrial. It's really the whole range, including hospitality and leisure real estates in Indonesia mainly. In Singapore, Malaysia, and UK, they have some investment holdings, and in China, they have 2 developments. They have 2 notable listed subsidiaries that are listed on the Indonesia Stock Exchange. One is the BSDE and the other is DUTI. So these 2 will actually have quite sizable land banks as well, including and a few others, which I will obviously bring you guys through later. This is just to give you guys a very good overview. They derive most of their revenue from the sales of development properties, and that will be in Indonesia. And currently, their geographical footprint is within Indonesia. Is largely within Indonesia. They do have some investment holdings in the 3 other countries that I mentioned, that I just mentioned, and they are looking to diversify and actually invest into more properties overseas. And these properties are more of investment holdings, whereby it will give them recurring income more so than development. So largely development in Indonesia and investment holdings overseas. In terms of their business activity, it can be split into 2. One will be the Indonesia property, and basically the rest goes under international property. For Indonesia property part of the company, largely is BSDE. They have a land bank of about 500 million square feet, and there's another 2 listed subsidiaries that come under BSDE that comes under Cinemas Land. These will capture almost like 70 to 80% of the value of Cinemas Land itself. Other notable developments have been listed here. The other one is Delta Mas. Delta Mas is an industrial township, which Once again, more details will be presented as I go deeper into the presentation. And the remaining just notable developments. For China property, Chengdu and Shenyang, each city have one development site. Chengdu is more or less done. Shenyang is up and coming. We do not think that the China part of their business is going to contribute much to the value of SML. AFP Land, basically this is a subsidiary under SML, fully owned. They are the holding structure for the Orchard Towers and the two golf/resort in Batam and in Malaysia itself. And lastly, for the UK property, this was a very quite recent acquisition that they did in UK. So Newham Brooks Building. Once again, I'll touch on all this soon. All right. In terms of segmental breakdown, they are large in Indonesia itself. Okay, their focus is largely on the city and township. So the city and township is really like a integrated. It's a very, very big area. It's an integrated project whereby there is residential, there's commercial, there's industrial, all into these projects. So you will see that a few of the retail and trade center it actually comes under BSD cities. Some of the hotel and also come under their city or township projects. So the same can be said for commercial and industrial. So largely focus on BSD cities, Kota Delta Mas, and also the Grand Wisatas and Kota Wisatas. So it's really those that's on your left of your screen right now. Alright? All these, okay, they'll fall somewhere along these four. Maybe there are one or few that falls outside, and maybe the last two, as Surabaya and Depot, will fall outside of these projects. But for the large part, it goes into these two. The first and the third one. Alright, this is just giving you guys a slight glimpse, some of the image of their projects and what they do. For example, in a BSD city, you can see it's really a huge, huge land. So what they do is that they develop everything, including the infrastructure, the residential, the commercial buildings and whatnot, and they're really getting very good profit margins out of this. Kota Delmas is very similar to the BSD cities. It's just that instead of commercial buildings, the focus here will be on industrial buildings. There's also residential and there's also many other components as well. Alright. So I shall leave you guys to actually look through this, go and download the slides and actually look at all the different development and projects that they have. Okay, I'll just bring you guys through the more notable ones. In the international part of the business, we basically China, Singapore, Malaysia, and UK right now. Okay, there's a good mix of office and retail. There's some hospitality play here, and obviously there will be some residential in China. So this is really not a large part of the business. In terms of geographical footprint, all right, largely concentrated in Indonesia, with a huge focus placed on the Jakarta area, which is here. All right, BSD city and Kota Delta Mas is all within the Greater Jakarta area, and this is where they derive most of their revenue, their profits, and whatnot. There's quite a bit of diversification within Indonesia itself. However, I would just say that if anything would pop the share price, anything that will actually drive the share price and actually show very sizable returns, it will largely be in this area. It will be concentrated here, which is good because the government is actually expanding the Jakarta city itself and really developing the outskirts of Jakarta within Greater Jakarta itself. So, yep. Right. So let's go into their biggest component of their value, which is BSD. BSDE is listed, all right, on the Indonesia Stock Exchange. All right, and this is what they actually, this BSDE company is about. All right, it's the largest developer listed in the Indonesia Stock Exchange. They derive most of their profit from development income. All right, and once again, they are the developer behind BSD cities, be it whether they are the sole developer of certain projects within the BSD city or whether they have joint venture with other developers or other counterparties, okay, to develop some certain buildings, certain real estate there. So this is the main bulk of their business. All right. In terms of recurring income, yes, they do have some office buildings that they hold as investment properties. They have maybe one or two malls and hotel and leisure, but this really it does not really contribute much to their value, really largely from the development. Okay, so BSD City is the biggest project. It's their flagship project. It's the biggest project within BSDE. This BSD is a company. BSD City is basically their first flagship projects. So total development rights, in other words, land that is assigned to them, that is sold to them for their development before they can sell it to third parties or or for their own use is 6,000 hectares, and this began in 1984. In 1989, all right, they started they commenced the first construction, and it has been ongoing ever till today. So currently, as of the end of 2013, the land bank that is left for development is 3,000. So the project is almost halfway through, and the project should last them all the way to 2035. And for the large part, okay, earnings momentum will come in the second phase. All right. So the second phase is always ongoing. Do not be fooled by the word target completion here. Target completion will really be the whole city, the whole of phase 2. Okay, as and when they finish any individual projects, they do sell it. Right, so it's really a development and sales kind of business model. The key highlights, all right. Okay, basically this is the largest privately developed integrated township in Greater Jakarta. I've explained what does this means. All right, is have a very diverse suite of residential products. All right, and basically they also develop all the supporting facilities, infrastructure in terms of the schools, hospitals, and so on and so forth. All right, so upcoming developments right now, okay, they are actually joint partners with some of the government and some other parties to build the Indonesia International Exhibitions. They are collaborating with Aeon Mall, which is the largest Japanese retailer, to build an Aeon Mall for them. And they have a few new residential projects, including a joint venture with Hong Kong Land. And also, they are going to build an office tower, and this, once again, the buyer is really Unilever. All right, so this is a topical, bird's eye view of BSD City, which is once again the largest project for BSDE. So you can see that it is a very huge city. There's a lot of ongoing projects on the outskirts, and it's continually expanding. There's a lot of residential on the left-hand side. The middle part is all the commercial buildings, and all obviously the ancillary services is also built by them. So I hope that this gives you guys a good picture of it. And all of this, okay, is kind of like it was a design project that they submitted to the government, and the government was standing behind it, BSDE, to get them to develop and do some urban expansion for Jakarta city itself. So we are very optimistic for this project for BSDE. The other large project that is also under SML is actually Delta Mas, and they have a 49.4% stake. So for this, once again, like what I said, is the BSD city is to the left of Jakarta, okay, the south western side, and this will be the southeastern side. So of Jakarta itself, still within Greater Jakarta is the whole Greater Jakarta state or city. All right. So basically, the land bank is about 2,000 hectares as of end of last year. So very similar to BSD city, this is an integrated township, but this is not commercial based. This is industrial based. So once again, they're developing all the other residential component, the commercial component, and obviously the industrial components, and basically developing a whole city itself, a city outside of Jakarta. All right, this plot of land is very strategically located and is within 50 kilometers from the seaport and 60 kilometers from the Jakarta International Airport. That would be about a 2-hour drive. Just so you guys know how close it is. In Jakarta, for industrial side, this is very well located. All right. So this is a view of where it is. Jakarta is the one in yellow. Okay, the whole Greater Jakarta, and Kota Delta Mas is here on the right of Jakarta itself. So they are located along a main toll road, all right, which is very busy, and to their left and right are also other industrial estates. So they're actually going into an area whereby industrial buildings are already there, and there's a lot of business activity there, and well, having going there, the demand, there's very great demand for industrial space there. All right, so you can see that to the left hand side, okay, which is closer to the Jakarta city itself, there's three major industrial estate, and to the right, okay, which is the famous Karawang International Industrial City, and further to the right, here will be the Surya Sapta Industrial Estate, which well, that one has kind of fallen out of favor. So really, they are actually located in a sweet spot. All right, right in the middle of the whole toll road. So you can see that in the other estates, okay, there are a few other very famous manufacturing firms. There's LG Electronics, which is the nearest at the MM2100, and the other more famous one here will be actually be to the right, which is Toyota and Honda, which is even further. So actually they are even nearer to the business spots. Just before we actually go on, alright, this is the split. Alright, residential component will actually be 28%. They're targeting to the mid-range to the high-end expats for people to buy their residential. And the company had employed a very efficient business model. They will only build the residential units, which are landed bungalows, only when the order is put through and it's been paid. So in that sense, they actually lower they manage their risk very well on this front. Industrial is 47%. Once again, we have up until today, most of their buildings are actually having very, very good commitment levels, pre-commitment levels. So this, like I said, this is a very prime site for industrial. For commercial, this commercial component is more of supporting the industrial factories that's in the vicinity. So yeah, it is very, very synergistic. For international property, I'll just highlight two of it. Okay, I'll just bring you guys through. New Brooks Building, in London, United Kingdom. This is really located 5 minutes away from the London city centre. In other words, this is part of the CBD. It's a very, very prime site, and they acquired this at £84 million. I think that their rental yield as of now estimated will be a very low teens. So this, even at very low teens, this is really very good for a mature market. To get such high yields is really great. They actually had to. I would say that the acquisition team did a very good job on this front. Orchard Towers in Singapore, this is recently put up for sale. They hold this investment in their books at about maybe 60 plus 70 million. And if you guys have actually been reading the papers, you guys should know that Orchard Towers right now is valued at about anywhere between 200 to 230 million dollars, depending on whether they are able to find a buyer or not. But the current day valuation is 200 mil. So there's like 120 mil that's waiting to be recognized when the sale goes through. For their Malaysia side, this is just one of their resort, alright, the Grandeur Palm Resort, and there's a golf course there. There's also another golf course under this business segment in Batam, and jointly this the Malaysia side will be valued about maybe 180, 190 million dollars, and yeah, on their books is recorded at about 54 million dollars. Once again, there's a huge valuation gap here. Alright, in terms of the China side, like once again I said, this is really too small in the grand scheme of things to actually affect the value much. But yeah, it's basically just two condo developments there. Alright, investment merits. Shall we just go straight into it? The first one, alright, is high potential returns from Enormous Land Development Bank. So you'll be asking, what do they have? For Cinemas Land, their stake, they have about 710 million square feet of land bank, and largely this is under BSD with about 500 million square feet within BSD on BSD's books. So BSD basically is like I said, they are the largest listed property company in Indonesia. Their market cap is about 3B. Obviously, we value them much higher than the current day market cap, but well, that's what we're saying here is that this is the current day market cap. So if allow me to jump forward here. Their market cap is about 3.08B Sing dollars. And Cinemas Land have a 51.5% stake in it. So in other words, just BSD alone is $1.5 billion already. And the market cap for Cinemas Land in Singapore is about 1.8B, 1.9B. So I'm saying, if BSD is already accounting for so much of Cinemas Land, and Cinemas Land do have other sizable projects as well, then obviously Cinemas Land can't be just worth $1.8 billion, isn't it? Alright. So just moving on. Under BSD, beside BSD City, there are so many other notable developments, and they are also quite sizable. Just that BSD City is the largest. Alright, BSD is a flagship project, and it takes about 350 million square feet, slightly more than half of whatever land bank that they have left, and it's the biggest revenue driver as of now. The other land banks, largely is in Kota Jata Mas. So I have already told you guys what it is. So they have a very sizable land bank, and they have a very valuable land bank. So since the market is not giving them the value that they should get because of the land bank, so what must the company do? The company must actually have very strong margins, very strong operations. They must develop the land properly and must be able to get good returns out of the land. So in that way, they are able to extract the value of the land bank through actual profits and cash flows. So we look at their margins, and we can see that ever since 2010, their gross profit margin hover at around 60%. Is largely going to held down by maybe some investment property, because the returns for recurring income, the margins for recurring income is not that high. But at 60%, this is definitely one of the well-performing developers, especially in Indonesia itself. And based on the track record and based on the management ability, there's no reason to believe that this margin is going to show very much variation. So we're actually, for the next 4 to 5 years, based on the current projects that they have, current land bank that they're doing, we are projecting their gross profit margin to hover around 60 to 65%, which is, this is not really high. In 2013, they actually achieved a gross profit margin of 69% already. But if there's a one-off, we believe that the margin will not drop anywhere below 60%. Another way to look at it is to look at the EBITDA margin. So we basically strip off every other things except the operational, which is 90% development. So this gives us an even better focus. So in terms of EBITDA margins, their EBITDA margin has been around 30 to 40%, and in 2013 it rose to a high of 53%. And while we do not think that 53% they will be able to maintain a 53% EBITDA margins, we believe that the EBITDA margins will more or less range between 40 to 50%. And this is just based on the projects that they already have. All right. I'm not saying that they may even go for other projects even push this higher. But for the current land banks, I think that this is how they'll be performing over the next foreseeable future. Okay, the next one. Okay, the fact that they have a large part of their operations in Indonesia itself, it means that they're actually mainly an emerging market property developer, which is a high risk environment. So we want to look at their financial management and see whether they are actually managing their finances well, and whether they are getting overly exposed in terms of their debt. So for here, okay, the top graph, okay, this is the debt to equity, the total debt, right, to equity. So in terms of the total debt to equity is really anywhere between 10% to 20%. And in last year alone, okay, because due to the notes program that they have issued, it rose to about 28%. But we do not, by year end of this year, it will drop back to below 20%. This is our forecast, and we believe that based on the management, how comfortable they are with debt, we believe that they'll lower their debt exposure by end of 2014. And at anywhere between 20%, this is a very, very low ratio in terms of leverage. In terms of their net debt, all right, okay, this is where the true magic comes from. They have a huge amount of cash, such that in terms of a net debt position, they're actually let me rephrase it. They are a net cash company. In other words, if you take their total cash and cash equivalent and take away every single debt that they have, okay, they're actually in a net cash position. In other words, there's no reason for any of their creditors to actually worry about them. And therefore, they were able to issue a note last year comfortably, with creditors feeling very at ease when lending them money. Once again, while we agree that this will give the management a very good war chest, so that they can take up certain leverage at the right point in time to pick up the right type of investment assets. As of now, okay, the net cash position means that this is a very well managed, very prudent management. So and that's a good point, especially when they are actually operating in Indonesia itself. Right, the last investment merit is their legacy assets. If we have talked about the Indonesian property for the large part of this presentation, so let's just focus on whatever is left, whatever is overseas in Singapore, in UK, and also in Malaysia. So a lot of these assets are held at cost, less any impairment loss. They have never revalued it upwards. And on top and based on this fact, okay, and looking at current day valuation for these assets, there's a potential value to be unlocked, which is we range between anywhere between 300 to 400 million for their overseas portfolio alone. So while we agree that while I think that the management will continue to adopt their own accounting policies, they're not going to change it overnight, obviously. But if they were to sell these assets, all right, okay, there's a potential value to be unlocked, anywhere between 300 plus 400 million. And for one good example is, I think about a few months ago, they actually put the Singapore assets up for sale, right? They bought it and they hold it at $64 million, and right now they're going to sell it at $200 million. So it's $140 million outright. If they don't sell, you will see this money comes in as profit from the disposal of assets. Yep. So these are the things that can really drive the share price when the time comes, when the market starts to realize, hey, so many of their assets are so undervalued, and as and when they sell it, their profit is going to shoot to the sky. Like in 2013 alone, when they sell a few of their land, they sell some of their land banks. Yeah, the profit was unprecedented, and therefore the share price actually reflected that by showing a slight increase. But what the market failed to do was to realize that every other assets that they have were all held at cost. So that is really a very good potential driver for the share price. So we shall come to the valuation part. All right. So once again, this is did a forecast of their revenue. There's very good visibility of their development pipeline based on BSD City and all their land banks right now. We can see for sure. It's just when they're going to develop it, but we can see for sure what's coming up over the next 4 to 5 years. All right, and we believe that there will be an increase in rental income expected. This will actually be reflected in the maroon area. You can see that it's going to grow to about 20 to 30% because that's where the management feel that as the company gets bigger, they should try to instill some part of the company whereby they're ready cash flows and give the company some stability. So we expect the revenue to grow strongly over the next 3 years. And we also, once again, expect the margin to show very little variation. This is a rehash of just the image just now. So the margins is going to hover, gross profit margin is going to hover around 60%. All right, and finally comes our valuation. All right, we initiate with a buy rating based on some of the parts valuation. This company is really very undervalued. BSD City itself, we are valuing at about $2.45 billion, which is, this is just a stake, the 51% stake of BSD, and even then we are one of the more conservative houses as compared to some other overseas research houses who are looking at BSDE. So at $2.5 billion itself is really more than the market cap of more than the market cap of Cinemas Land already. So at the price of 61.5 cents, this is a very undervalued company, not including every other parts of its business. So if you look at the other projects in the standalone office projects, standalone commercial projects, and obviously their land bank from their tamas and other individual sites. All right, the Indonesian side alone, okay, will be about 3.8 B, and basically the overseas property side, okay, this is based on current market comparables and their valuations. Will give them another 600 mil. So we add in the effect of a net cash. Okay, and basically also the potential dilution effect from the warrants, all right, and to arrive at a target price of 97 cents. 97 cents with an expected dividend of maybe half a cent at year end, which is really not what you guys should supposed to focus on. Just look at the target price, look at the land bank and their operations. That's 97 cents. That will give you about a potential upside of 55 to 58% returns. And we think that, yeah, based on, it is a matter of when, not a matter of whether it will or not. It's a matter of when the market will start to realize that this company is very undervalued and really drive the price of this counter up. But once again, this is our view, and there is the disclaimer. But yeah, we do really believe that this company is very undervalued. But that is in our opinion. All right. So just to highlight some of the key risks before I end my presentation, right? I think that the first key risk is actually the political risk. Why do I put political risk and policy risk together? Because there was a new president that came in. The current economy of Indonesia, where the growth in the economy was the slowest in 2013. But even having said that, the growth in 2013 was 5.8%, and the government is definitely aiming to raise this above the 6% mark in 2014 and going forward. So there will be a whole new slate of new policies that's going to be introduced when the new government is sworn in October 2014. We're definitely looking at the level of acceptance by the nation when it comes to all this new policy. But we are quietly confident that the outlook for Indonesian property real estate market is actually quite positive in the long run. Another risk that I have to point out is the currency risk. Why? Yes, they did not actually how do I put it? All their cash is held in Indonesian IDR, and definitely the currency risk is only when you look at translation at paper loss or paper gains when you translate into SGD at year end when you report their financials. So in the long run, okay, we do think that the currency risk will be a factor, but in terms of the business operation, all right, this is a non-factor. They do not have a day-to-day having to convert within IDR to SGD. It's really more of the paper whereby they will report their results in Singapore dollars. So if you're just looking at the fact that business operations alone in IDR, their profits are actually much higher than what it seems because of the long-term depreciation of IDR over the past 5 years. So yeah, currency risk is present, but look, this is a predominantly IDR company. So yeah, this may not be that big a factor in the long run. So we have a buy rating at target price 97 cents. This is a recap. Okay, once again, the investment merits the high potential return from the land bank. the ability of the management to extract the value of the land bank through healthy margins, and obviously prudent financial management giving them a war chest to invest into overseas properties now, and obviously the fact that this company is really very undervalued. Even if they were to sell off everything they have today, just selling off the land itself is worth more than their current market cap. And once again, we come to the end of the presentation, and if there's any question, please feel free to ask. I'm here to clarify it.
Hi, question here on iREIT Global. It's from what we can see, it's not a bad buy. Freehold assets tenanted by mainly Deutsche Telekom, so it's very stable. Also, the assets were initially purposely built by Deutsche Telekom, so it's quite unlikely they would move out. There's a CPI-linked step up for the rents. It's at 8% yield, right, which is very attractive for freehold assets. And their balance sheet is quite healthy right now, so I mean it's not that geared, so they actually have some room to acquire other new assets. So we actually view iREIT Global quite favorably.
Right. The first question for Cinemas Land. All right. How is Cinemas Land going to fund all of their planned development projects? To be really truthful, I think they're going to fund it with cash. This company is flush with cash. We're talking about them having a net cash position, and they have picked up some debts to actually take on more development. It's really taking advantage of the fact that, well, at a point in time last year, they were able to raise cash at quite a favorable rate. So they took up the notes. But just on cash alone, they are able to take on the projects. On top of that, they do partner with counterparties and enter joint ventures, just to secure the exit option as for certain buildings. Like for example, Aeon Mall. So they wanted Aeon Mall to come in because basically to provide them with the expertise in terms of retail side, and also the fact that Aeon Mall presents an exit option even before the development even started. So how are they going to fund all of their planned development projects? I would think that the large part is through cash, and definitely along the way, maybe trade financing, and not going to be a big issue. Definitely, I understand where your concern is, and the fact that in terms of borrowing rates for Indonesia banks and whatnot is very, very high. So definitely there will be a concern as to how they're going to fund it. But largely cash. If not, they will joint venture with counterparties to go into it together to actually lower the fact that they have to borrow. Yep. So I hope that answers your question. The second question: who are their competitors? What portion of the market share do they hold in the Indonesian market? All right. Breaking this down into just for Indonesian market itself. Once again, I say it, almost 80 to 90% of their projects are in townships, integrated townships. That means they develop the whole town, including the road, including the schools, the ancillary real estate development, and also the main commercial component or the industrial component. So who are their competitors? If we are looking for a like-for-like competitors, the answer to that is actually zero. There's no other competitors that actually of their size doing their level of development and But if not, if you're looking at single project wise, I think that they are always aiming for the mid to upper mid scale of the economy. So their competitors all range around there. But for the large part, the competitive advantage comes in the fact that they are township developers. They can develop townships at that scale that the government are very comfortable with, and the government is very willing to let them handle it. So in that sense, competitors, I don't see any like-for-like competitors. The next question: besides property, does cinemas have other types of business? The answer to that is actually no. This is a pure property play, or rather, even more specifically, a pure property developer play for Indonesia. Yeah, these external proxy you get to property development in Indonesia. So they are, I wouldn't say that they have any other type of business. It's just the difference between whether they're developing or whether they're holding it as investment, everything for a capital value gain. Okay, another question. Will cinemas land pay first then build model affect demand for the residential property? This pay first then build is unique to one of their big project, which is Delta Mas. The reason because it's the industrial, the center of the city is largely industrial buildings. So they are targeting the expats, the mid to high range bungalow kind of people who actually work for the industrial sites. So on that front, there's a concern that, well, maybe the demand may not be there, therefore they have to adopt a pay first then build model for that, for Kota Delta Mas. For the other residential, right, they do not adopt this property, especially within Jakarta city itself. They have very good sites within Jakarta city for some of their residential projects, and there's no reason for them to pay first then build, because basically that will eat your margin. They will build first and then put it out for potential buyers to come in, and therefore they are able to get very good margins on that. So yeah, do not confuse this pay first then build model as their default model. It's not. It's just only for the Kota Delta Mas site. Yep. Who are the major shareholders of cinemas? You can actually fish this out in my report itself. Flambeau International Limited is actually the Wijaya family, so they are the major shareholders. The rest are just, the next biggest is only 0.4%. So except for the large part, which is the Wijaya family, the rest is just minority shareholders. The next question, with such a long development stage for the integrated township development, how do they sustain, especially since earnings momentum only arrive in the second phase of completion? Okay, just to clarify, when I say that the earnings momentum kicks in the second phase, throughout the first one, phase 2 and phase 3, the earnings are good. I'm just saying that the earnings momentum only arrives in the second phase because the second phase coincides with the ending of the first phase, whereby they recognize a lot of their profits, and the start of the second phase. Okay, within each phase itself, there's a lot of development. There may be like maybe concurrently 8 or 9 developments happening at one point in time. So the earnings will always be there. And the only reason why I use the word earnings momentum is because phase 2 is right in the middle of it all, whereby there will be 3 phases. There will be a full recognition of profit for the first phase, partial recognition from second phase, and the third phase you can see some of the lands and profit when they sell some of the land within the city away. You can see all of it rushing in. So on that front, earnings is actually going to be good. So the question here is, how do they sustain? All right, I would think that you are asking for in terms of the cost, how are they going to expand the capex needed to bring in the right type of materials, raw materials, and also utilizing whatever development capacity that they have. The thing about it is that BSDE, okay, if we will delve deeper into what BSD is doing, you realize that it's a very huge property developer. They do have sizable capacity to go at an even more aggressive rate, and they do have it. And it's just that BSDE do not want to just focus on BSD city itself. They want to diversify, so they also took on some development projects within Jakarta city itself. So I mean, there's a good mix whereby the profit is coming from the other projects as well. So capacity is not an issue for them. I wouldn't think that will be a cause for concern here. The next question for cinemas, is the real estate valuation too optimistic? I would not. Okay, if let's say there is no timeline and we are allowed to just say that my target price is from now to eternity, I'll say at 0.97 is actually quite conservative. The reason why it is 0.97, I have to take into the fact that, yeah, I do have a 12-month outlook for this company. And the fact that, yeah, within these 12 months, okay, whether the market is going to give them the value that they deserve, and how much of the value can they extract it out by themselves. In other words, through developing and selling it. obviously the ideal case right here for you guys, okay, is that the market starts to realize that hey, these guys are undervalued. Their land is really worth so much more than even their market cap alone. But in the event that this does not happen, the company management will have to extract the value out of the land bank by actually developing it and selling it, and therefore realizing the value one way or another. So is 97 optimistic for 12 months? Well, I think that this is anybody's guess. But if you're telling me in the long run whether 97 cents can be extracted out of their land bank, I don't think that there's any doubt for that. Yep. So it's really kind of a timeline issue, and obviously how the market views it. Once again, I would not go so far to say that the market will definitely give it their worthy value, but I would say that based on from a very operational perspective, okay, how the company is doing, what type of margins they are getting, okay, from a very numbers based perspective, 97 cents is our target price. The next question, for Cinemas Land, the target price is 97 cents. Is this their net tangible NTA, net tangible assets value? So the answer to that, alright, okay, is no. Their NTA, okay, as guided by the management, is much higher, but their accounting policies, alright, that they have adopted is to hold it at book value. So if you are looking at NTA, let's say that's based on 2013 year end, the NTA, okay, is actually much lower than 97. It's actually just a mere 40-50 cents, and as it is within that range, because NTA means it's just the assets at book value, and the book value is based on their accounting policies, and their accounting policies is to hold it at historic value. That means the value that they buy it, and they are only allowed to lower it by the impairment losses, but they will not add in the reval gain. That's their accounting policies. I do not have any control over that. But if you're looking at the actual value that they can extract out of it, in my opinion, it is higher. Cinemas, the next question. Cinemas shareholder is Flambeau International Limited. Could you please tell us a bit more of Flambeau International? This is a company that Flambeau International is a private company. There wouldn't be any public information on it. But I do think that it's basically the ownership by the original, the Asia Pulp and Paper, the APP, which is the Wijaya family. The original, that means the top two guys, which is just give me a second. The top two guys in the company is from the Wijaya family, which is also the second richest in Indonesia, or third richest. I'm quite sure their family is within the top 5, and they are also the one behind Asia Pulp and Paper. So I do believe that Flambeau International Limited is also under them. So, but I wouldn't want to go so far to say that I can confirm this information, because Flambeau International is a private, it's a private company. But yeah, I would think that it is under the original family ownership. It have to be, because it's 65%. Oh well. Okay, the next question, could you repeat on what is the holding percentage of Wijaya family on Cinemas Land shares? 65% or more. Yeah, as in that's as much information that I can get as well. 65% or more, because Flambeau International owns about 65.6% as of Friday close. Next question, by listing in Singapore, would they have to convert to fair market accounting practices and making the market immediately recognize their hidden value locked away in their land assets? No. The answer to that is no. Yes, there's a fair market accounting practices. So in their every year during the year end, alright, they will at some point in time make mention of the potential market value of the assets and the potential reval gain if they were to make the reval, if they were to revalue their assets. But they are also given the option to not revalue their assets, but just to disclose this amount out. So that will also mean that they fulfill the fair market accounting practices. So no, they do not have to definitely recognize a revaluation gain. There is no such requirement on that front. They just have to disclose the potential amount, which will allow them to fulfill that criteria. Okay, technically, Cinemas Land is entering into distribution phase, and its price is likely to fall further. It won't be advisable to recommend buying at this point in time. This is a comment made by one of our listener. There is, once again, this is I would think that this is more of a technical outlook. For us, we are looking really at the fundamentals of the company, what the company have in their books, and how are they going to extract the value out of it. So based on a very fundamental outlook, okay, I base my recommendation on a very fundamental outlook. I understand that in distribution phrase, I'm just trying to guide you guys on what's our target price for it, based on the fact that we have done our financial modeling, we have looked at their individual assets, what the potential returns that these assets can give to the company, what the future profits going to be like, and really coming to a present day value of all of this. So maybe you would like to clarify as to why you think that based on that, it won't be advisable to recommend buying in at this point in time. I would definitely like to hear from you. Right. In Indonesia, the next question, in Indonesia, any expiry date for land ownership, number of years for ownership? As of now, I would think that every land that the government gives, there is a certain lease period. Some are freehold, there's a mixture of leasehold and so on and so forth. But for Cinemas Land, they are given the rights. What they have bought, okay, is the rights to develop the land and subsequently sell it. So for them, it's a development based model. So the expiry date for land ownership, while it is important for some of the assets, for BSD, for the larger development projects, it's not a matrix that is given to them. It's just that they do have a certain timeline that they fulfill based on what they have lodged, whatever documents they have lodged and the design plans that they have given to the government. They have to abide by the timeline. Yeah. The next question, there any comments on whether 2013 debts have been fully paid? There's huge debts in 2013. Trust me, at about 20 plus 30% debt, total debt to equity and total debt to assets, right? That is very, very low. Have their debts been fully paid? The debts is a mixture of notes, which is a multi-year notes, and a mixture of borrowing that expire in over the next 2 to 3 years for their borrowings. So they do have the capacity to fully pay off all of them, even today. It's just that they are holding on to those debts so that they can gain a certain leverage and reach their ideal gearing point. So in that sense, to make the company's returns the most optimum for them. So whether their debts have been fully paid, for 2013, it will be fully paid. Simple as that. Yeah. Will they distribute cash after sale of Orchard Towers? The next question, I highly doubt so. This is a company that is very focused on growing right now. They want to acquire more value accretive assets, and I do not think that they will distribute the cash after sale. At least for the past few years, they do not have such, the management do not display such tendencies and behavior to distribute the cash out. It's like last year's, their dividend was $0.005, which is not impressive. They are really a developer focused on growing, so they will largely keep the cash and to grow the company further. Yep. Especially, there's a comment that says that the technical outlook is actually very promising, especially if we close this today. Well, then that's good, I suppose. But I can't really comment that. I'm more of this is really a fundamental target price, fundamental analysis produced target price. Is there any plan for raising fund through share placement or rights issue? As of now, communication with the management, I do not think that there's any plans to raise fund through any share placement as of this point in time. I would think that at this point in time, the management is fussing over the fact that they have a lot of cash and they're wondering where to invest it. So that's why I actually make, in my report, I actually made a statement saying that, the company is actually looking for overseas assets. It's just that based on today's current market conditions, be it in Indonesia or overseas, investment properties at good prices is very hard to come by. So it will take some time for them to spend the amount of money that they have. Yeah. Another question would be, for the great number of years that cinemas keep their huge land bank before developing it, will this number of years be deducted from the years they have? And they do, okay, for the great number of years, I think that is a case of how they lodge a plan with the government. Largely, I think that they're looking at BSD city itself ever since like 1980s. At that point in time, Jakarta city wasn't very well developed, and the government needed time and for them to iron out all the design issues, and whether the government urban planning team had to come in to advise whether this is feasible and whatnot. So at that point in time, BSDE is really at the forefront of things, saying that, hey, we have ambition, this is going to happen. So we want to get this land, and therefore they got the land at a very, very good price, and then they were holding on to it, and therefore, I mean, they had to iron out with the government. The government is like behind them in years when it comes to urban planning, and finally the government gave them the go ahead, okay, in the early 1990s, and therefore they really the actual development actually only started in 1994, whereby the company is already going ahead full steam, doing all the infrastructure and starting to relocate the residents accordingly, building a city outside of Jakarta itself, and really getting good success. So that's why I was saying that it was only in phase 2 that earnings momentum really kick in. Yep. So were the number of years we deducted from the years that they have? No, it doesn't work that way. For them, once again, they got the land, okay, by the land development rights. So the years, okay, the number of years on the lease will only start when the development ends. So no, the answer to that question is no. Hopefully that answers the question. What's the possibility of cinemas being privatized since management is so stingy in declaring dividend? The chance of it being privatized is not high, and not at all. Yeah, the Wijedia family is still holding on to it. I think more than 65%, and it's not that the management is stingy in declaring dividend. It's more that they do have the land, they do have development projects that is coming up that they can provide you even greater value. So if they were to give you, let's say, the dividend, whatever money that they made this year, they will give it back to you, and then for the next development they have to use their own they have to go and borrow money, and it doesn't make sense for them. Or if let's say they give it back to you and they realize that they have better projects. So as investors, don't you want them to actually embark on those projects more so than you having the money and you having to go to the market and find another property company that basically may not even have 60% gross profit margin? I don't know. I think that you can look at it from either way. It's really kind of a personal preference as to whether you prefer dividends or you prefer the company to reinvest whatever money that they have into more development projects. The question, I think there's a clarification. The land is for 99 years and same as land hold the land for 20 years, then only left like 79 years. I think that I clarified that in the previous question, but I think I do appreciate that you are clarifying this with me. No, it doesn't work that way. The 99 years, if let's say the land has 99 years, the 99 years starts for the land for the person that after Cinemas then develop the land and they sell it to a buyer. The buyer will have 99 years starting from that point in time. Yeah, so it does not apply to this in this case to cinemas. Yeah. So another question: can foreigners invest in property in BSD City that is buying their housing projects? No. As in, like, I think that unless you get special permission from the government, you can. As a foreigner, I don't think you can buy direct. It really depends on new law. As in, like, while we do, the general consensus is that foreigners cannot invest directly in property. We do hear of like some foreigners being able to set up a company and holding the residential property through that investment holding. There's workarounds, but as far as I know, direct as an individual, as far as I know, I do not think that you are able to do that. Yep. Is there any other questions? Okay, there's a question on OSIM, so I'll allow my colleague to take it.
Hello, there is actually a question on what is your analysis on OSIM? Why is the current price drop after a good result release? Was there any adverse news? Okay, on the whole, I feel that although the bottom line for the last quarter was quite good. The top line, if you look at it, the revenue was not actually, the growth was not actually fantastic, considering if you are consolidating TWG. So, of course, the management explanation to us is affected by the World Cup. But when I look at it, I feel that from TWG business, it's still not contributing much because it's still they are still expanding the business in this sense. So in terms of the contribution to the bottom line, is not a lot yet. So right now, what you see in the growth in the contribution of about, I think more than at least 10%, I think 15 or so % on the bottom line, it is mainly from the OSIM and the JNC. So when the TWG business is actually more stabilized, you can actually personally, I feel that you can actually see that the contribution to the bottom line will be much greater, and this is where the growth will be in this sense. There's a question on will Brazilian labor war affect GLP overall profitability. I think there will be minimal impact in this sense because on the whole, the Brazil portfolio for GLP is about 10% only. So I think the effect on this is there will be, but I think it will not be too great. I think it is going to be quite minimal in this sense. Thanks.
I think there's no further questions. All right. If there's any other question that you guys would want to clarify or even before moving in for this, I think obviously my advice to call your trade reps or advisors or anyone. If you want to contact me, I do at my report. Yeah, can just drop me a mail. My number is there. Call me. So if there's any other further question that you guys have. If not, then okay, we get a feedback on the sound system. So all right, going forward, we will try our very best to make sure that you guys can hear it clearly. If at any one point in time that you guys are having any issues with the sound system and whatnot, okay, just directly feedback to us. We'll try to rectify it as much as we can. I really hope that our IT system will actually pick up be much better after this, but yeah. Anyway, thank you for all. Next week, same time, 11:15, we will try to start promptly then. In the meantime, have a good week ahead. Yep, thank you. That's all.